Right now, prices are rising at a quickening pace. Housing, food, energy, all at a time in which many are unable to support themselves and their families. The actions of the central banks and governments have dire consequences, and it's actually not understood by the public. More intervention is always the answer, they say. The more they get, the worse it becomes. You came here for the truth, so let me unveil that for you. Today, we are going to talk about when the prices rise, chaos begins. I'm going to show you several indicators around that. I've got a lot of different information today. I want to cover as much of it as I possibly can. Oftentimes I bring up 20, 30 different tabs, but because I'm going in all different directions, I often can't get to it. And you've been noticing, these videos have gone into 17, 18, 19 minutes. So I'm going to try to condense them, try to keep it short. Let's go. This article here is talking about Tesla, and this is where I wanted to begin because we're looking at the extremes of today. The extremes, and this is definitely one of those. You're looking at Tesla, which right now, its current price to earnings ratio, the PE ratio, it would take the company almost 1,600 years to make what the stock market says it's worth. That just shows you how crazy things have become. Now, I understand this is one company, it's got this, it's got that. They've got robo taxis coming everywhere. They got flying taxis. They've got underground tunnels, and they've got all these different things. Well, at least that's what we've been told is going to happen, and the market's already pricing these things in. Regardless of what you think about the stock, regardless of all of that which we have seen, understand that there's so much euphoria in the market. It's a mania. There's no doubt about that. The question is, how sustainable is it? Will it be necessarily, you see one of these coming up and maybe there's a consolidation period up and down, and then after a year or 6 months or whatever, 18 months or whatever it might be, it starts to go up higher while the moving averages can kind of move up with it? Or do we see a period of consolidation, correction, and then, let's say a rebalancing? Nobody really knows, but I'm definitely paying attention. I will keep you up to date. The Federal Reserve has this thing called the Beige Book where it's constantly looking at all the different information that it has. It puts it into this report. I've brought it to you many times before. The one I wanted to show you specifically was related to prices because that's what we're talking about mostly today. You can see right here, almost all districts saw modest price increases since the last report, with growth in input prices continuing to outpace that of finished goods and services. Most notably, prices for construction and building materials, steel products, and shipping services were reported to have risen further. I'm sure you've been hearing about it. Lumber prices increasing. The cost of construction is simply going up dramatically. I've heard reports as much as 30% on the lumber, and that really puts the prices of the homes up. Now, that doesn't account for homes that are already built, which I think is hilarious because in many cases, you see the prices of those already built homes, they're being sold today. Those prices are going in line with new construction as well. So it doesn't necessarily correspond, but they love to use that as an excuse. They also talked about, some other details in here. I just wanted to note the fact that the Federal Reserve is covering this. They do mention it, and it's all districts. So we're getting this from all around the United States. Obviously, this affects everywhere. We have seen largely wherever you have this issue of today, which is a global issue, it's of course going to have an impact on the prices. Some places might be one higher than the other, but we know that is definitely the situation. Energy prices, one of those. I'll give you some more information in just a second. Bloomberg Agricultural Spot Index, you could see what's been happening through 2020. It has gone up quite a bit. I know that there's certain individuals who have been waiting for this moment, which it finally has been coming around. There are different reasons for it. There's no doubt about it. That's quite obvious when you look at one certain aspect of the markets. You can't necessarily pinpoint, okay, it's because of the supply chain. That's it. That's the only reason. There have been many things. And look, the supply chain issues that were taking place earlier in the year are not exactly going on today. There are are a lot of problems with the chain, the whole chain of events, and things coming overseas and so on. But the delay, at least in my experience, you're talking about a delay of, let's say, 2 weeks compared to what it was year over year, a 2-week delay. So I don't think that a lot of this is really accounted for in the prices. I think there's a lot of other things going on. But I'm going to show you this chart here. I'll show you another commodities chart in just a second. It's been fluctuating, as you can see, but we are now back at the levels we haven't seen since 2014. So there's definitely some changes right here as it relates to the agriculture. WTI crude sitting at almost $53 a barrel. This has definitely come up. I mean, I pulled up the 1-year chart. You could see where it was just slightly higher than where it is today. And then it actually went into the negative for a very brief period, but they started buying it up like crazy. So it made it back to that around $40 a barrel where it's been up and down over the years, but certainly around that $40 a barrel happens to be quite common in this period. But over the last few months, the prices have definitely picked up. So this is just something that it really, especially for the shale industry, they have to be able to attain a higher price in order to sell at a profit. And around that $40 a barrel, pretty much for all of them, they're not getting that. That's why you see some serious layoffs, hardship in the industry in the United States specifically. They do need a higher price. So we'll see what happens with that and, of course, its impact on jobs. Bloomberg Commodities Index going from 2008 up until the present. I brought this to you not that long ago, and I was just explaining the fact that what they had suggested was that this was on an uptrend, and it has continued to move up since the last time I brought that to you. So this is interesting to see what we're looking at specifically with commodities, how the rise has continued here. It has seemed to be on a new trajectory. I don't know if it's sustainable. We'll see. It all depends on many factors, not just the resurgence in the economy and so on, but of course what the central banks are doing, and of course the rotation from certain, let's say, growth stocks, tech stocks, the high flyers, the penny stocks, all of this. Maybe there's going to be some purchases in energy and so on. That's what's happening so far, but we'll see throughout 2021. But it can't be true, can't be real, and everything I just brought to you must be false, because if you look at the personal consumption expenditures price index, the core PCE rate, the Federal Reserve's favorite indicator, the core PCE, let's just check it out here. November 2020, that's 1.4%. 1.4%, that's right. Does that make any sense to you? 1.4%. Well, I think there's one very, very important thing here, excluding food and energy. But I couldn't help but notice the fact that we just saw the fact that food and energy are both rising significantly. Doesn't that tell you something strange? They call it volatile. They have to make sure that they don't include food and energy because it's too volatile. If by volatile you mean that it goes up and it kind of hurts this very weak indicator, well then, yeah, I guess that's what it is. And could it be possible that the global central bank assets, as they call them, and their increase every single year, particularly 2020, more than ever before, could maybe have an impact on prices? Well, I don't know. I really don't know. I mean, I can look at all the historical examples of that. I could see exactly what they're doing. I could even read the quotes from the central bankers themselves saying, maybe, just maybe, that printing a whole bunch of money does cause some dislocations and distortions, but why do that? I could present this to you and show you that $9.2 trillion annual change. And you look at what's been happening over this period and realize that all they ever do all they ever do is make things worse. They are not there to help you. It's funny. You look at their activities and it's very clear. The price stability? Of course not. They're actually making it worse on a daily basis. Full employment? Are you kidding me? What does buying up garbage toxic assets ever going to do to help support employment? And I don't think that the Federal Reserve should be even doing that, should be even trying to support employment at all. That's not their business. They shouldn't even be in business. Never mind. But I'll tell you right now, they're quite profitable. Fed's Brainerd says unemployment as high as 20% for low earners. She emphasized the need for policies that can help those who are unemployed. And yet another sign of economic scarring created back in 2020 up until now. An influential Fed governor acknowledged that the unemployment rate for the lowest earners may be 3 times the national average of the fake 6.7% of the U3 rate. Brought to you by the U.S. government. Unemployment for workers in the bottom wage quartile in the U.S. is likely above 20%, emphasizing the need for urgent economic policy that can help those who are currently without work. When they talk about this, generally what they say is that they need more fiscal policy. Fiscal policy is what they want, and ultimately what that means is going into deficit to pump up the system, trying to get people working again. They've already done this, and I've just heard another report that they expect as much as $2 trillion. $2 trillion of a stimulus to try to be put through. We'll see what actually happens with that, of course, but that would be, let's say, in the coming weeks. So in the coming weeks, they're going to pump out another $2 trillion. Who's paying for it? Well, you are. You are paying with your taxes. So we'll see what actually happens. I don't see how that's going to actually get people working again. You got the $600 check for some people. They got the $600. Really what they wanted was $2,000, but you're just going to burn through that $2,000 because I have noted approximately $6,000 is already backlogged for so many people in their mortgage, in their rent, in their payments, and so on. All the credit card debt on top of that, all the other payments on top of that. This is not going to fix the problem. Do you understand? I know that you, as my subscriber, you know exactly what I'm talking about, preaching to the choir, but I just read this information and it just irks me. And it's just terrible to see, because the average individual, they can't get helped out by the system. And yet as they do more of it, it only dilutes the value of that currency, and it actually makes it worse for that bottom quartile. 655 people have $4 trillion in wealth. 200 million can't cover a $1,000 expense. Northman Trader posted this. I thought it was interesting. Just wanted to bring it to you. It's truly shocking to see how things are today. The California dream has been fading for a long time, and people have been voting with their feet. You've heard of this, not just with California, with New York. You've seen the migration going from New York to places like Florida. You're also seeing Arizona taking a big chunk of the people, a lot of them coming from California as well. Just take a look at what's been happening in the last few years. The exodus has accelerated, with tens of thousands more people leaving than moving in. In the fiscal year that ended in July, Los Angeles County had by far the greatest loss due to migration of any California county, more than 74,000 people. Some moved to nearby areas with lower cost of living. Others ventured farther or left the state altogether. And this is what happens when you've got these super expensive locations and people who can't afford their basic essentials. That's not a good thing. And of course, the policy measures they put into place can never help anybody. It's just unfortunate that they only make things worse, and the public hasn't seen it. That's the problem, really, because if they would actually want less of what's been happening and actually some resolutions to the underlying problems. Restaurant and hotel workers reel as layoffs soar again. They're just giving you a couple examples here. What's been happening with some people. They've been getting, this much employment. They've received the paycheck coming in the mail. And unfortunately for this industry, whether, we're looking at the leisure and hospitality, the tourism and so on, they're just getting hammered and hammered hard. You can see that this is probably going to continue throughout 2021, but as I've noted, with how many people are going through TSA, let's say, we had a huge drop off, and while there are variations, it's kind of inching up, but it still has a long way to go, and that just gives us some idea of what's happening in all of these different industries that have been really, really affected by that. Look, if there's shutdowns, you're going to have serious issues. If they have capacity limits, what are you going to do? If they can't have outdoor dining and they're restricted to only indoor dining, and then you've closed all indoor dining, well, what happens? You basically effectively shut the business down. This has been happening for a long time. It's been about a year now. If you could just think about it, I was considering this just a couple of days ago. This has been almost a year. I really don't know how a lot of these small businesses are still around. I really don't. You're open, you're shut, you're open, you're shut. And, you just see how many people they take the loan, they take another loan, and then they're just, sitting on so much debt. And when they finally open up, where's the revenue going to come in? So many businesses are just redlining. They're just barely staying alive, but they want that business to hang on for obvious reasons. I understand. But then, you add upon all that debt, and it's just, to me, it's just truly sad. But what is the solution to the problem? Of course, spending money. Canadian households focus on repairing finances, not spending. Uh-oh. Well, according to this poll, looking at this, 3 of 4 respondents want to pay down debt or save more. Of course, they see a crisis around them and they think to themselves, you know what? I might as well pay down that $1 million mortgage that I have instead of going out there and buying this or that. Of course, we know they still are regardless, but at least some people are conscious of that. But this is what they want. In the US, the stats are 70% of the economy is the consumer, and in other places, the number is quite similar. You look at what's been happening right now, and, we just have to grow out of this. You look at the deficits, and, you can look at it as an up or a down, depending how you view it in your mind. But they're just saying, you know what, as long as we can grow and continue to grow, we're going to be totally fine. But you can't grow out of what they've just dug you into. Okay, let's make that very clear. That is a fact. Last one I'm going to cover today, December Class 8 orders rank 4th highest in history. This is important. You're looking at the big rigs. You're seeing these trucks. The demand is clearly there. Now, I'm watching what's happening with freight on all levels, and you could see that there is certainly demand in certain sectors. This is just one of them. I wanted to give you an update on that. I'm going to show you all the stats. I'm not just going to give you 200-day moving averages. I'm not going to just show you the unemployment rate. I'm going to give you everything. And of course, we just stay up to date on it all. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. And if you haven't learned about e-commerce yet, this is a skill that everybody should be picking up right now. All right. And maybe you are unaware, or maybe you already know about it, but you got a family member or a friend that doesn't. Send them this link, the AmazonGPS.com. They can learn for absolutely free. If you want to know about the financial system, you are interested in all the details, and you want it explained very simply, my 2 books will do just that. Check out the link in the description. Have you seen this video yet? If not, you definitely want to check it out. And it's right there. Just click on it and I'll see you there.